I'd say the biggest takeaway, obviously, is kind of the revenue numbers that you guys had just alluded to in terms of expectations for 70% growth next year from mid 40s. And I think what's happening right now is a number of factors. One, hyperscalers are planning to spend much more than maybe we previously anticipated. I think Nvidia pointed to about 1.3 trillion next year, and that was about 200 billion above our expectations or forecast for next year. So I think that's kind of a big driver. And also, what you're actually seeing away from the hyperscalers, those neo clouds plus Musk, is kind of the bucket I would throw it in, and that's actually growing faster than the hyperscalers, and I think is helping to really kind of diversify Nvidia's broader business. And then, what I would also say is the content growth story, and that's the biggest reason why we have been bullish here over the last couple of years, continues to exceed our expectations, and we see no signs of that letting up as we kind of look here over the next couple of iterations. And then, of course, I mean, I'd say the one blemish was the margin issue out there. But that being said, they are going to increase pricing as we go into calendar 2027, and that clearly is supporting that 70% growth trajectory and helping to kind of maybe ease some of those pressures and stabilize the margins going into next year.
But Angelo, let's talk about some of the possible hurdles for Nvidia and for growth going forward. I mean, are they too dependent on a small group of tech giants like the hyperscalers as customers? And then also remember, some of these customers are increasingly developing in-house chips that could potentially take business away from Nvidia.
Yeah, no, absolutely. You're absolutely right. And I'd say the competitive pressures are out there. And we still look at Nvidia even after the monster move today. I would say that the multiple remains compressed based on some of those concerns, some of the competitive pressures out there, maybe some of the circular financing concerns that are out there as well. But as far as the competitive dynamics and the customer base is concerned, the good thing is we are starting to see, and there are signs that customer base will diversify going into next year. Essentially, Nvidia pointing towards more of a 50-50 split as we go into next year. And that kind of helps alleviate maybe some of the concerns from a customer concentration perspective, but that will remain for the foreseeable future. But in the same respect, listen, when you think about NVIDIA's ecosystem supporting about 6 million developers or so, those hyperscalers will need to continue to spend. I will just say this. Maybe the growth rate from the hyperscalers going into next year, let's call it closer to 50%, whereas maybe for some of the non-hyperscalers, those neoclouds, you'll see significantly higher growth. Let's call it closer to 90 to 100%.
Angelo, one of the concerns out there for Nvidia specifically, but I think just for the AI space in general, is some of the circular funding structures that are being created out there, where maybe Nvidia is funding some of its customers in various formats. What does the company say about that? Did they address that last night?
They did. They actually, I think for them, it's an area of strength, and in many respects, it is, right? I mean, historically, when you kind of look at the competitive advantage that Nvidia has had, it has been that CUDA software, right? And now it's not just CUDA, it's also the fact that they've got some massive scale. They're generating massive free cash flow. You're looking now at a $200 billion run rate. This time next year, it'll probably be closer to a $300 billion free cash flow run rate. And they're pumping a lot of that right back into the ecosystem. But essentially what they're trying to do is build out, be a supporter and growing out that AI infrastructure, because without them, it's going to be nearly impossible to do. For them to kind of go out there and support the ecosystem, they're helping to kind of lower the cost of capital, and they're actually allowing these neo clouds to succeed. So in many respects, they're going to participate they're going to benefit in the sense that they're going to get that hardware revenue. They're also going to potentially get revenue in terms of and enjoy the upside from the actual sales within those data centers. But it is a risk. It is absolutely a risk if we get to a point where we overbuild and Nvidia is sitting there with having built too much capacity as well. So there are pluses and minuses to all this.
Angelo, how much is Nvidia doing all of this and just wowing us with their numbers without China? Because there still are restrictions on Nvidia doing business there, right? How important is gaining more access to the Chinese market for Nvidia's growth?
Yeah, I mean, you would have thought it would have hurt them by now.
Yeah.
I mean, to be honest with you, yeah, right. It was, I think, 1% of their revenue in terms on the data center side, or less than 1%. So virtually no revenue coming from China at this point in time is all upside. But at some point in time, listen, it's going to be an issue for them as the growth rates here in the U.S. eventually have to slow down, and we'll see how successful we kind of get this open source versus closed model debate. But as you kind of see more and more token growth and success from the Chinese market, I think you're going to see greater, maybe greater concern or motivation from Nvidia to try to get the U.S. government to get some of their, more of their chips into China. But at this point in time, they're going to have to do it without China, because there's no way, we think the U.S. government is going to allow that to happen.
Angelo, from a competitive perspective, what is the biggest threat or challenge to NVIDIA? Is it the other chip makers, the Broadcoms, the AMDs of the world, or is it some of their customers, as Alexa was suggesting earlier, that may be developing their own chips internally?
I think it has to be some of their customers at this point in time, in the sense that they're going to have to continue to purchase NVIDIA's servers. That's not going to stop. But what it can do in terms of some of these hyperscalers developing more of their own internal chips is it will slow eventually and get to the point where NVIDIA's growth rate will start to level off and really mature. So I think that is the biggest risk at this point in time. But keep an eye out for AMD. You're going to see them really come on hard, I think, over the next couple of years. They're just now ramping up Helios, and we think there's some significant potential for that over the next couple of years.